All right, welcome to the Desmond Show. Welcome to this episode of the podcast. Today, I've got a very special guest, a longtime friend, my friend Bharath, right now who is in Singapore. Okay, he is also called the TradeShifu, right? Which Shifu basically in Cantonese it means guru, not fake guru, but real guru. This time we have a really proper guru, someone who's actually very good at what he does. Bharath, welcome to the show.
Hey, thanks, Desmond. Yeah, great to connect with you. It's been some time. Yeah.
Yeah, so I met Bharath actually at a seminar, and one thing I learned about going to seminar is that seminar is really, especially when you go to a really high level seminar. We went to a seminar where the teacher or the trainer actually talk about speaking and public speaking, and when you go to seminar that is so specific, many times you get to meet some really what I call high level connection. Like Bharath is someone that I consider to be extremely high level at what he does, very, very successful. Bharath, how about this? Because I don't think many of my audience would have heard of you because this is a completely different industry that they're in and that I'm in as well. So would you mind actually just maybe giving 2 minutes of introduction about yourself, what you do, and why they should listen to you in this podcast if you're letting go any tips at all?
Yeah, definitely. Yeah. So, first of all, yeah, thanks for having me here. And I'd love to share my story. And I think it's important that people hear so they can, use it in their own life. So basically for me, I came to Singapore right after my JC. So I came here to study in NTU. So did about 4 years of computer science.
NTU is Nanyang Tech, yeah? Just for the
Yeah.
audience to know, okay?
Yeah, Nanyang Technological University. So, I mean, like everybody else, I thought computer science was my thing. I started coding as a 12-year-old. So that was my passion at the time. And graduated with, a decent degree, started working for a company here. And most of my projects were based in SGX, which is the Singapore Stock Exchange. So that's kind of my first introduction to money, trading, stock markets, and everything. And I was really curious to kind of understand just on a fundamental level of what it is that I'm doing at work. So I'm very fascinated with numbers. So I always like to dig in deeper to find out, hey, what is this really actually doing? So what am I building this for? So I was building some price portfolio models for our clients. And so that's how I got interested and then started learning more about it. And then, living in the world's most expensive country teaches you a few things. And as an entry level job, I was basically getting paid minimum salary, like $3,000 a month, which was barely enough to cover my expenses. And that's when I realized 2 months into my job that this is not going to do it. So I can't see myself working for 30 years and still not having a peace of mind of being able to retire in a place like Singapore. So that's when I started exploring something else and doing something on the side. And so since I was already exposed to trading and stocks, so I thought, okay, I had seniors there, so I asked them how do you get started? And then didn't get much help there because your colleagues or whatever would probably want you to focus more. I mean, I was a software developer than doing something else on the side. So it was my own research, and then I started dabbling into it and see how I could get started. And that's really where I started it. So this was back in 2013 when I started work. And so it kind of started off as a small side project. And probably I would say a misfortune or a blessing that Singapore is 12 hours ahead of US. So I started looking at the US stock markets. And so when the New York Stock Exchange opens at 9:30 a.m., so it's 9:30 p.m. here. So that was my routine. So I would go to work at 8 a.m., come back by around 7, 8, have my dinner, shower, and then I would be ready at 9:30, 10 to start trading. So I would do that at least until 2, 3, 4 a.m. And I did that for about a couple of years until I started seeing consistent results. And that's really when I figured it doesn't make any sense when I'm doing this part-time at night, which is paying me 3 times more of my salary than my day job, which was quite hectic as a software developer. So then finally, after 3 years in 2016, on my 25th, just a week before my 25th birthday, I quit my job and I wanted to do this full time. And yeah, it's been a great journey so far. Started TradeShifu, been all around the world, speaking at many stages and helping thousands of people, achieve consistent income from the stock markets. Specifically, what I do is options trading. So yeah, we can get into that in a bit. But yeah, so and it's been quite a journey. So I mean, I can work from anywhere I am, and I think the biggest say achievement like so far from like being on this journey of TradeShifu is the fact that I've been able to impact people where they see the value of this, and not just me. About I think last I heard, 5 of my students have quit their jobs to pursue a full-time career in trading. Although that is not my aim, but if you're really doing that well, I'd rather do this full-time.
Right. So what I'm really interested was that you said that you went to Nanyang Tech University in Singapore, one of the most prestigious in Singapore. You got a degree in computer science, right? And it got you into a job where you were a software developer, but now you ended up becoming more into finance, more into the stock market, which is really interesting pivot if you think about it. But I will consider that to be quite natural. But more importantly, what's interesting was that because a lot of my audience, sometimes the younger ones, like people that are still in high school, they say, I want to be wealthy, I want to start a business, I want to start a fund, I want to do investments, I want to trade stocks. Should I go to university, right? And that's always a very tough question to answer because there is pros and cons to going to university. I believe, I think the social part is a lot more important than the learning to make money part, because I went to University of Nebraska, which is quite decent for its business school. I didn't learn anything much about business there. Let's just say that. But I learned a lot about networking. I learned a lot about culture. I learned a lot about how do you go into a party and announce yourself. That's something that life don't teach you. You got to go, to parties and stuff like that. And I think what's interesting about what you said was that you work as a software developer with SGX, one of the largest. In fact, it is the only Singapore stocks exchange, but one of the largest in the world. But here's the thing. You were not satisfied with what you were paid. You felt like you got more to give, and you decided to pursue something part-time. And that side hustle actually created a life-changing, I would say, a platform for you if you think about it, right? It is such a huge change for your life. And I think pretty much you owe it to the stock market and the stock exchange to actually push you in that. But what I really want to ask you is, because you do something very different, because when people think about stock market, they always talk about stock trading. They always talk about value investing, perhaps like buying REIT or buying blue chip stocks, like, dividend paying blue chip stocks, and they'll just buy and they'll hold for like 20, 30 years. Or they will just trade, right? Which is to look at graphs all day. And then what they do is that they want to speculate on a particular stock, whether it's going to go up, go down. And you do something called option trading, which from what I understand, is actually a lot more newbie friendly in a way, because people can start with lesser budget, lesser capital. So do you want to just maybe in your own way explain what option trading really is and why it's more superior compared to, let's say, dividend investing and also stock trading?
Yeah, for sure. Yeah, so I think the kind of first question, I'll want to address the first question that you said. So like talking about like your audience, where, you said maybe like a younger crowd, like who are trying to go into university and, go to the traditional path, and like what's important to them, or like how do they get wealthy in a sense. So fundamentally, I believe that there are only 2 skills that are important for you in life to succeed. So one is to know how to market yourself, like you said, announcing yourself in parties and that kind of thing. So I mean, you go to an exam, you are applying for university, you're basically marketing yourself, right?
Yes.
So you don't look at it that way, but I mean, when you're going for a job interview, you're selling yourself. So I guess marketing is one of the biggest skills that you need, and the second thing that you need is basically a way to compound your wealth. And in today's world, I think like coding is becoming another necessity. So I'm not sure if you're aware, but India just like released this news that coding is going to be like compulsory and taught in schools, and they're revamping the whole education system. And so I think that way, so I think these would be the only 3 skills that you would need. So for a younger audience, for a person who's wanting to, do something, I think focusing on any one of this is definitely going to bring results. And going to talking about, what is the attraction for options trading, right? So I get this question a lot, saying like, hey, like, which stock do I buy? So, and it's the same thing as, just because I have a computer science degree doesn't mean I know how to fix your computer, right? So I've also had those questions, like back when I was, working as a software engineer, like, hey, I have this problem. Like, even my parents would call me, like, my computer is not working. Like, you have a degree, like, fix it. Like, it's not how it works. And just because I'm in the stock markets doesn't mean I know, okay, or I can tell you which stock to buy.
Yes.
So there's a very wide spectrum. So just because you're a doctor doesn't mean you can fix every single problem that you have. So specifically what I do in the stock markets is options trading. And the reason why I started with that was because, like I said, I started this off as a side hustle, and I didn't have a lot of money to begin with. So I was, staying in a double bunk bed, sharing a room with 4 other people, to try and save money and put it into the stock market. And options trading is by far the cheapest way to participate in the stock markets, right? So if you're looking at, I think everybody's talking about Tesla, Amazon, and the opportunity that you would have had to buy these companies before. But mind you, like, Tesla is trading at 1,800 for one share, and Amazon is trading at $3,000 per share. So, so it's like, so it's a matter of how can you participate in this trend, right? So with options trading, what happens is the options as an instrument itself has a leverage of 100:1. So basically what that means is, for every dollar that you put in, it's equivalent to having $100. So meaning you put in a few $100, that's equivalent to that times 100. And so that is where the attraction is. And so you're basically able to participate in the trend in the markets for a fraction of the cost. And the way it's structured is that you basically can set up any kind of options trade to even say make money when the stocks are going up, stocks are going down, or even if the markets are not moving at all. So it gives you a lot more flexibility, it gives you a lot more customization. And so that is the main attraction for trading options. But then all people hear is only these 2 things, right? And then they're like excited, okay, like with a couple of $100, I can make a significant amount of return. But what people also don't hear, and that I feel that they should before they go and like start trading options, is the fact that these are structured in a way such that they have an expiry date to them. So meaning, if you are buying options or even selling options, they have an expiry date before which whatever you had predicted has to come right. So that means that as much as you can write and make significant amounts of money, there are also chances that if you're wrong, then you're also going to lose money fast. So like in most of, like, I guess like the way marketing is done right now, like you'll see a lot of people putting in big bold results and claims that, okay, I made $1 million with this, with that. But they kind of don't tell you what are, like, the downsides of it. So I mean, the downside is that options trading requires quite a bit of learning, at least a couple of months before you kind of understand the instrument and you can make a decent portfolio with it.
So what I'm really curious is, a lot of people liken options trading to insurance, right? So basically you're buying insurance to a particular outcome of where the stock is moving. So do you want to maybe give a little bit of clarification about that? Because some people that might want to get into options, they have a hard time understanding what is an insurance to a stock, what is shorting the market means, because these are all very Wall Street term, right? So maybe can you give some explanation to someone that is, let's say, completely brand new? They heard things like call, they heard things like put, they thought that calling means calling the stockbroker or something. They think that put something down, right? So maybe can you give some basic explanation, fundamentals, so that people really know, hey, these are the terms, that the jargons that these people use.
Yeah, for sure. So this is something that 6-7 years ago, it almost feels like a lifetime back that I learned these things. But this was something that I learned, and it was super useful for me when I first started figuring out, okay, what calls are, what puts are, like when do you buy which one, for what market conditions. So like back in the day, I think, like, so I'm a 90s kid, so I was born in 91. I'm going to be like 30 in 2 weeks. So so back in the day when I was growing up in India, like we had this like really old phones which would, like when you call them, like they had the thing that where you had to whatever press to ring, and then so it was this super old phone, right? So basically when it rings, so you would pick it up, right? So it's the so I read this analogy somewhere and it made a lot of sense to me. So when that phone is ringing, so you basically pick up the call, right? So it's pick up the call. So basically, if you're expecting the stock to go up, you want to buy a call. So you're picking up the call. So up means, okay, you're buying a call. Okay, then you pick up the call, then, okay, you talk to the person on the phone, then after you're done with the conversation, then you put the phone down, right? So you put the phone down. So put means, okay, if the stock is going down, then you want to be buying a put. So pick up the call basically meaning, okay, you want to buy calls when the stock is going up, and you want to be buying puts when the stock is going down. So this in broken down is very simply how you can remember, okay, which one should you be buying if the stock is, let's say, for example, going up or down. And in addition to that, it's in fact with options, there are only calls and puts, and you can only either buy or sell them. So there's only like 4 fundamental operations. So like buying a call, selling a call, buying a put, selling a put. So we already covered 2, and the other 2 are just basically selling options. So it's exactly the opposite of what it would be to buying a call, or say with when you're buying options. So you would have to close them out by, say, selling it. And so in this case, you're basically selling it first, and then you're going to have to buy it back. So in terms of, you also mentioned like people look at this as an insurance, right? So so put options are basically considered insurance. So for example, let's say you already have stock. Let's say, for example, you're holding Facebook stock, right? And let's say Facebook is trading at $120 and you bought it at around 110, and you don't want to be losing, say, more than $10 on this, right? So that means that $100 is your minimum. So if the stock goes below 100, you don't want to be losing any money. So what you can do is go into the markets and buy 100 strike price put option. So that basically covers you for any kind of loss or adverse effect if the stock goes below 100. So that is why they look at options as a form of insurance policy where you're kind of paying premium every month. So instead of paying premium here, so you're basically paying the cost of purchasing the put option. So that's what insurance is. And some of the, I think there's another term that you mentioned, short selling or even shorting. So that is a term more for, like, let's say, like, during the Corona crash, like the entire market crashed, right? So it's like a mini correction of sorts. The entire stock market was down 30%. So for a conventional person who's only taught 2 ways of trading or investing, right? So which is buying or selling. So shorting is another term for selling. And so if you wanted to participate in that down move, then you basically be shorting the markets or shorting the stocks. So which basically means that you're selling it first. So you're selling high and then buying it low. So that's just another fancy term for, Wall Street people to make it sound cool. But fundamentally, it's just 2 things that you can do. So either you buy low, sell high, or you sell high, buy low.
Right. So I'm assuming that in order for you to be making money in options trading, you have to be participating in a market that is volatile, right?
Yes. So and generally, so that's the beauty about options, right? So it's not necessary that you have to have a certain framework or a certain condition to happen for you to be able to make a profit. Like, for example, if you're buying stocks, like there's only one way you can make profit if it goes up. Or if, let's say, you're shorting stocks, again, there's only one way. Like only if the stocks come down can you make a profit. But with options, like I said, it gives you that flexibility, gives you that customization. So you can do a variety of strategies. If the volatility is very high, then there are a bunch of strategies that you can do. So you can consider selling options to basically collect, because everything is going to be expensive. So you sell premium and then you sell it for a high price and then buy it back lower. But if, let's say, like right now, volatility is like drying up, and then it's S&P is about 40 points from making its all-time high. And now, so how you can participate in the markets is by, say, buying a call, because markets are going up every single day. And in a low implied volatility scenario, we can be looking at buying options as a favorable strategy. So in a way, like like the crazy thing about options, like as much as, I can talk about it for days, weeks, and I won't be able to stop, is the fact that you can like any single scenario that you have, right? Like even the craziest thing that you have, like for example, if you think Apple stock is going to finish between 195 to 205 in the next 30 days, right? So if that is your like statement like written down, you can in fact structure an options trade specifically for that, and you can make money if that condition that you did state does happen. So that's really the beauty of options for somebody who loves math and somebody who loves numbers. Like this is their like casino to be at, like, because like anything that you can think of, you can structure an options trade similar to that, and probabilities are known beforehand, so it's very mathematical, very statistical. And I think the way to be trading with, especially if you want like numbers and probability on your side.
Okay, so what's interesting about this is because for me, I'm more familiar with the typical dividend investing where we read the financial report, financial statements of companies. Do you analyze companies the same, or do you have a certain patterns that you're studying? Do you have a charts, or how do you analyze a company? How do you pick a stock to actually, obviously put in your money in, or where you decide whether you want to go for a call or put?
Yeah, so that's a brilliant question, right? So this like what I might say, like half the people might think that okay, this guy is crazy, but yeah, I half the time I don't even know what stocks I'm trading, right? So because I have algorithms, so coming from a computer science background, yeah, I've written code, and everything is kind of automated, right? So if this particular condition happens, it doesn't matter what stock it is. Like half the time, like I don't know what stocks they are. And I don't look at any of the news, any of these other reports, because of two reasons, right? One is the fact that there is always going to be error in it, right?
Yes.
Because all these reports are done by humans, like, sometimes maybe to make the company more marketable or make it
Bias
more
report
appealing.
too. Extremely
Yeah,
biased report,
exactly.
isn't it? Right? Fake
Yeah.
news.
Yeah. So, and that is like, if you're purposely wanting to put in something that is not true. And it could also happen that somebody might unknowingly make a mistake, and then that can go into the report, right? So, and it can snowball into a big thing. So that's why, one, it doesn't make sense for me to look at reports. And analyzing these reports is, again, a number of people do it in a number of ways. But whatever you do, right, it's going to be like after the company has published this report, and some analysts have gone through it, verified it, and then it becomes public, and then you hear the news. By then the stock markets have already reacted to it, so the stock price is already reflective of all this news before. Unless you're telling me that you're the first person to get this news and then you're able to trade before everybody else trades, then go ahead, analyze the news and do that. But if it's not, then I don't see a reason why you should be doing it. And so the way I trade is purely based on numbers, and I'm just looking at statistics and probability in order to see whether or not, okay, this is a good trade to make, like an 80% probability trade or a 90% probability trade. And like when I started trading, like it was even difficult to get information on, like, like say which stocks to buy, or like even in fact for options. But as crazy as it might seem, like during COVID, when I had like a little more extra time, I built an algorithm which basically can predict future prices of the S&P 500. Like, how crazy is that? So
crystal ball. You should call
so
it crystal ball. That's
so
the name of the software.
So it's called Smart Forecast now, but yeah, so I can add that in. So basically, what this algorithm does is predict what prices S&P will open at, close at, what will be the high and the low tomorrow. So because of course there's going to be error, it's not like it's foolproof or anything, but for the back testing that I've done so far, we've seen a 0.5% average error for like the last 3 years of data. And of course, when it's more volatile, like the Corona period, it's had a little more error. And so that's why we only predict the next day prices, because of course, the longer you're predicting, the more, it's prone to have errors. and it's been doing really well. And yeah, I've been posting it on my Facebook lately, and there's been a lot of interest. And it's a free Facebook group. People have been joining and making money every day. It's kind of keeping me busy as well. So yeah, and I never thought it was possible, right? Like, I mean, if you tell somebody that, hey, I can tell you what price like it's going to open tomorrow, that's 2 years ago, I didn't think that was possible.
So this software gathers information from where, and then you process the information through your mathematics calculation, right? And it comes up with a certain prediction or speculation, but it gathers information from a source. What would be the source for these software?
Yeah, so I basically use the market data. So currently this algorithm only predicts the prices for SPY, which is the S&P 500 ETF. And so I get so I collected the last 20 years data. So it's available for free on either of the two websites. I think Yahoo Finance has API, which gives you free access to this data. And also investing.com also has this data. So basically what I do is collect it, and I only use 5 data points. So which is the open, high, low, close, and the volume. Right. So using this 5 data, so I basically built a self-learning model, which understands, how the markets are trading, trending, and it has trained the model in the last 18 years. And so we've been running it live for the last 1.5 years to kind of see how it's doing, and so far it's pretty good. And this is from free data that you can get online. And so these are the only 5 data points that we use, and it's completely based on just this data, like no news, nothing, because whatever news that there is, right, so it's already going to be priced into the values of these data. So I don't see the need to incorporate news into it, and it's very subjective. Like you can't predict like how the masses will react to a particular news.
But do you know that a lot of software, these kind of software, hedge funds in Wall Street, in many different parts of the world, they actually spend a lot of money building software like this to give them an option in terms of, speculating whether a stock is going to go up or go down. Have you heard about it? Number one. And number two, what is your opinion about hedge fund in terms of, from your perspective?
Yeah, so in fact, there is a statistic which is in the market, which basically says like, 80% of the trades that happen in the stock market are all by robots. So which are basically, banks, institutions, hedge funds, market makers, like all the big players, right? So they're not going to be sitting and, clicking on the mouse every single day to be trading. So it's all automated, it's all robots. So I foresee, like, it's 2020 now. By 2030, we'll all be bidding to, get the best robot. I honestly see, that is really where we'll be going. And so it's not going to matter, like, which university or which degree or which job that you have. When in fact, I was recently looking at a study which basically said from Business Insider, which was saying that in the next decade, we'll see at least 60% of the jobs that are there today will be automated, right? So like robots or like, something else is going to take over, like, the traditional sales, accounting. There are already a lot of softwares, that can do that. So this is the same thing. And it's staggering that like over 80% of the trades are done by these big banks, institutions with robots. And these are all algorithms trading. And the balance of the 20%, I think out of that, like 19.5% is probably again like the big players. And so retail traders making this are at a very negative, like we have a lot of things against it, because we don't have that access to information. We don't have the proximity to these servers to be able to quick to react to news and those kind of things. Right. And so what we really want to do is have probability on our side. So, and by using options, that gives us the flexibility to be able to do that. So that is why it's like options trading has really been something that I've been very fascinated with. And even though I've been doing this for like over 7-8 years, like I learn things new every single day. I also have friends working in hedge funds, and so all the times what they're doing is basically trying to improve the model, trying to reduce the lag time, or reduce these small little coefficients which are going to make a difference in their trading, whatever, as in profits, right? So, and yeah, so these big players are all have all built successful models, and it's just about, tweaking it here and there to say certain extreme market conditions and whatnot in order to, make this a viable model for continued sustainability.
Okay. So basically, if let's say there is a brand new person, completely brand new, let's say working as an engineer, working as a doctor, whatever it is, this person is looking into making some additional side income, and he's looking into the stock market, right? And we know the stock market is going to have some effect end of this year with the election with Trump versus Biden.
Yeah.
Whichever result, whoever becomes president, I think there's something going to happen there, right? And people are looking into that opportunity. So actually talking about that, I want to ask you about this before I ask you that question. What would happen if Trump wins the presidency, and what would happen if Biden wins the presidency to the stock market, and what are you doing to prepare for it?
Yeah, so that's a good question. So again, then I'm not really picking sides. So, but from basically seeing the two people on how they're marketing and what the general consensus is, I think that Trump is going to be president again, whether we like it or not, or whether I want it or not. Clearly, I don't want him to be, but yeah, that's aside the fact of who is a better marketer here. So, like most of people are still talking about Trump, and in a way, so he's getting people to talk about whatever he's doing or not doing, the stupid things, the funny things, the idiotic things. But he's still getting people to talk to. I mean, getting people to talk about him. So in a way, he's doing that well, and I think that was the reason why he won the first election, and he's probably going to win the second one again. But irrespective of who wins, right? I'm not really making say a strategy or a play on who wins, but I'm just making a play on what that's going to do for the economy or the markets going forward. So if you look at it, like I mentioned earlier, we are like just 40 points away from the all-time high, like S&P 500, and I see that I foresee in the next week or like in the next 10 days, we're going to hit new all-time highs. And there is definitely some upside because the election is only in November, right? So
Yes.
which we have like another 3-4 months at least. So like the presidential debates and, the promises and all that is going to be discussed from now until then. And of course, the Federal Reserve is going to continue to pump money and keep interest rates low. So, everything is stable. Although people are losing jobs, like companies are not being able to, pay their bills and all that. So this is an super artificially inflated economy, which is like a ticking time bomb, if I can say. And so as of right now, for somebody who wants to do something, like you could still go in and purchase stocks or even purchase S&P 500. There is definitely some upside, at least another 5-10% until the elections happen. And from there, in the next, say, so it's going to be end of 2020 already, and in 2021 or say another 2 years from now, we'll definitely see like a real stock market crash, like that happened in 2008. Like not like the Corona one that was like a temporary, market correction because of the unexpected event, but like a proper technical crash that's going to happen. And so that is really the big opportunity. So if you want to prepare yourself for the big opportunity, I'd say do whatever you can, earn money and save it. And when the markets do crash, like if you're an advanced investor, like you can make money, of course, when the market crashes. But if not, like, once it crashes, you can buy into the markets then, and then it's going to be a sweet ride up. But for somebody who wants to prepare like right now for this is basically by playing the volatility, right? So volatility was super high when the Corona crash happened, and it's coming back down to an like really low level right now. So in fact, I just posted it on my Facebook and to my community that going forward, when S&P reaches its all-time high and it starts going up, so S&P and VIX have like an inverse correlation, right? So like VIX is basically the risk. And so as the S&P continues to go up, like VIX will go down. And so I'll start accumulating VIX. So VIX is like the index, so you can't really buy VIX by itself, but there are ETFs on it. So I think the most popular ones are VXX, UVXY, and a couple of others. So I'll be picking up these ETFs on VIX, and so they're going to be going lower and lower. And irrespective of who wins or what happens, there is definitely going to be an increase in volatility towards the end of the year going forward. And that would be the safest way that I see, in my opinion, would be to play out this entire election scenario. So I did the same thing like last year. So I started, like, VIX was at and volatility in general was at an all-time low, and I started buying it like last year September, October, at like $15, $13, and then Corona hit, and then like VIX was up like to 80, 85, right? So it's like so it's probably not going to go that high, but definitely it's going to go up from where it is right now. So that's really a very simple strategy that I do in the markets, is to basically pick up VIX ETFs when volatility is super low, and then sell them off whenever the next correction, crash, or something uncertain happens. And it's just the nature of markets that corrections keep happening at least once or twice a year. So that would be like the sure way of seeing a profit. But the fact is that you have to be prepared to hold on to it until you see like a correction, right? So that's the only thing. So as long as this is money that you don't need immediately and you're willing to wait, so that would be how I'd be doing. And that would be like the best way to get exposure from this election, rather than having to pick and choose, okay, what would happen, because it's not just our bias or like our thinking, right? So it also depends on how the masses think about it, so that you really don't have a good idea about. And so this way, you're wanting to play it safe and make sure your risk is reduced.
Well, what's interesting is that I talk to a lot of traders too, and I talk to a lot of market investors too. Many of them are saying the exact same thing that you're saying when it comes to saying that, the Corona crash is just a kind of like a hiccup, it's kind of like a bit of like a small sneeze before the big thing happened, right? Because I was asking them, like, right now some of the assets are pretty cheap, right? Are you buying anything? Are you putting money into the market? And they said, no, we're just accumulating cash right now. I think the bigger tsunami is going to come, and they don't think it's going to be this year. They think it's going to be probably end of this year, around Christmas time, or it's going to be Q2 next year. That's the common answers that I'm hearing from a lot of my friends who are doing trading in various different forms, like commodities and Forex, so on and so forth, right? And I thought that was really interesting. And basically what you're trying to say is that I think you're quite similar in line with them, saying that maybe the big crash has not come yet. So it's actually very important for us right now to, number one, conserve cash, but more importantly, practice. Wouldn't you think so? Practice with the small volatility that is available, so that when the big one comes, you can go in there and reap the big and harvest the big, the big fruits and the big money, right? So if for someone that want to get started with option trading, like they have always been fascinated about the stock market, but they do not know where to get started. They don't even know how to open an account. Where should they get started? How much money should they put in? And what is the expectation they should have?
Yeah, so I think there were a few questions, so I'm gonna try and break them down. So one, I think this is definitely the small sneeze before like the big volcano erupts. And so in terms of timeline specifically, I don't think it's going to be that sudden. So meaning Christmas this year is like the president is not even going to be sworn in. So like November is when elections are. Jan is when he's going to take the White House like official. So I mean, it's going to be some time. So I'd foresee like maybe earliest would be like somewhere mid next year, right? Or like generally October is when markets have always crashed. So like maybe next year October, but I don't foresee like before June 2021, unless something spectacular happens, like Biden wins the elections with like a 80% rate or something, like it's like something like totally out of the ordinary. Right. But under normal conditions, like I think it should take like at least a year or so from where we are right now for us to see any kind of significant downturn. And yeah, for somebody who's new to trading, right? So like I said, okay, before I address that, I think there was another question you asked, like, how am I preparing for it? Like, am I using my cash to, say, pick up any assets that are trading cheap right now? So like I said, I've never bought stocks and I've held on to it. The only thing that I've ever bought is the VIX ETF, so which is VXX. And yeah, so I've already started purchasing them, and I have like a significant portion of my portfolio into it. And the rest I use on a like daily basis for me trading my options, which are super short term. And also, in addition to this, no matter what happens, right, I'm always buying physical gold and silver. So as you know, like gold just hit like $2,000 per ounce, uh, like probably 50% higher than where it was like pre-corona. Silver's gone up 120%. So and Bitcoin is back up to 12,000. So in terms of, yeah, investing, like stock market is of course like where my main, like my big fish is. But I have these smaller fishes which I've been like, uh, dipping in every single month. So I've been buying physical gold and silver since 2016, which was when I quit my job. So I buy on a monthly basis. And so, yeah, and right now, like they're all making significant, yeah, money. So kind of trying to sell them off. And then Bitcoin is also like back, I think a couple of years ago when it was down to 3,000, I bought like, I allocated 2% of my portfolio to just buy Bitcoin, and I've just put it in my brokerage account. And yeah, like yesterday I checked, Bitcoin is at 12,000. That's a 400% return in like, say what, 2.5 years of me basically having done nothing. So that's like an insurance policy that I've bought on, like, if all of my trading and whatever, goes. And there are a lot of people saying, right, like Bitcoin is the next big thing, is going to go up to 50,000, 100K, whatever. But yeah, so it's a small portion. And I think you would want to have like a very small portion allocated in these different assets, just so that you have a diverse portfolio and not everything in US dollars and not everything in the stock markets, right? So that was your second question. Then the third question was, for somebody who's new to options trading, and for somebody who wants to start, like what can they do, right? So like I mentioned, I've just started this smart forecast algorithm, which basically predicts stock market prices. And right now I'm posting them on my Facebook for free. And so the objective of this is basically to get people to learn options trading. So, if you're like, in this space, like investment, coaching, training, business, like everybody is selling their courses for like $4,000, $5,000 at a minimum for like an entry level thing, right? So it's not even options. Like options is already like an expert thing. It's like a introduction to stocks, or like how do you pick stocks, and that is already at a 4,000, 5,000, and which I think is a ridiculous amount of money to spend as a, or rather pay as a convenience fee to things that you can easily Google or find on YouTube. And so I'm posting these predictions on my Facebook for free, and I have a Facebook group which is also free for people to join. And the aim is to educate people on how they can use options to, use these predictions to make solid trades. So for somebody who's new and who wants to learn, so I think they can head on to this Facebook group. So where it's all free right now, and you can join. You can get these predictions for free.
What's the name of the Facebook group?
I'll probably, I don't remember it. It's smart. If you search for smart forecast, you'll be able to find it. So if you join
Smart Forecast, okay.
Yeah, it's a Facebook page called Smart Forecast. I think you should be able to find it. The group is linked to the Facebook page. So
Right.
you'll be able to find it there. And then, so once you join, like there's a lot of content that I have. Like there's a basic course which basically explains what calls and puts are. And the only reason I did that is because people were like, oh no, we know that there is a lot of resources available, but we don't know which one to go and see. So if you give us, or like if you teach us, we'll be more than happy to learn it from you. I'm like, that just doesn't make any sense. Like I didn't go and pay anybody to, learn from. And I learned this from Google. But if you insist that you want to hear it from me, or like, learn from my voice, okay. So that's how that that introductory course began. And so it's all down there in the Facebook group. So so I think that would be a really good place to start, because like I think we were also talking about this earlier, like before we got onto this call, that I think the biggest problem that people face is that they are very successful in their careers, and then they come into this very niche field where they have no experience or little experience with,
Right.
and they expect the same kind of results or success that they've seen in the stock
Gotta
markets.
gotta build it up from scratch, right? Because when it's
Yeah,
completely brand new, you gotta gain experience. One thing I always say is that when you're jumping into something brand new, don't try to be like level 10, level 20 right away. Everyone's gotta start at level 1, right?
yeah, and so they kind of want to see that same results that they spent like over 25 years as a doctor and being able to do surgeries now, and you want to come into the stock markets and like be able to do options trading. It's the same as like getting a, like options trading is probably like getting a PhD in whatever, like mathematics or something. So it
Yep.
definitely takes a lot of work. And then the second thing is, so those are for people who are just starting new, and then for people who've already been this for a while, I think that their biggest problem is the fact that they're not able to achieve these returns or results consistently, right? Because I mean,
Right.
it's only a matter of time. You can only make or lose money. So you make enough trades, you're definitely going to make a profit. But whether or not you're able to make consistent profits week after week, month after month, is their biggest concern. And so that way it comes down to, you know, the psychology and the mindset. So I mean, like you and I are coaches, and I think what I think separates us, or that fact that we even, you know, spend big money on learning, you know, that learning mindset is basically that psychology, right? So I think Tony
Yes.
Robbins and all the others, like they all say like 80% of your results basically comes from your psychology, and just 20% is about the strategy and, you know,
Yeah.
the discipline to basically stick through it. So and this, especially in trading, it makes a whole lot of difference, because there's a whole cycle of emotions running through your head, right? Like greed, fear, regret, and all these things, like FOMO, like, oh, I missed the bus already for Bitcoin, like is 12,000 cheap now, or can I still enter? The S&P is already so high, like or Tesla is trading at 1,600, should I buy? So like these are things or conditions that you've not been trained to and not done before. So it's important that, you know, you go through this mental conditioning first. And I don't think anybody else in Singapore or Asia teaches about the trading mindset and the trading psychology. So in my workshop, especially, I spend the entire first day on just the mental conditioning of people, so they're in the right frame of mind to be able to grasp the strategies and use it. Like everybody can give you a strategy, right? Like
Right.
everybody, you and I both know what Warren Buffett does. It's public information, but that
Yes.
doesn't mean we're able to achieve 25% every single year for 25 years.
Yes.
So that is, yeah, I think the bigger problem. And I think you should, for somebody who's wanting to start new, like you need to understand that it's a long-term goal, and that you want to like, you know, slowly start learning and, you know, picking up skills towards seeing this as something productive, and that, you know, whatever effort that you're putting in is going to be compounded, and over 30 years it's going to be a fruitful result that you're looking at.
That's great, Bharath. So we're running out of time, but I just want to ask you, how can anyone find out more about the courses that you do, the Facebook group, or about yourself? How can they connect with you?
Yeah, so I'm on Facebook at okay. So I think you can see it's TradeShifu. So on TradeShifu you'll be able to find everything that you need. So I'm quite responsive to messages on Facebook. So either find me Bharath on Facebook, or TradeShifu, or the algorithm that I was talking about, Smart Forecast. So this again is like a new service that is part of TradeShifu. So if you find any of these pages on Facebook, send me a message, and then me or one of my team will get back to you shortly. And that would be the best way for you to connect with me. And of course, if you need more information about who I am, what I've done, where I've been, and all that, you can find that information on my website, which is again tradeshifu.com. So yeah, that's where you'll be able to find all the information, and look forward to connecting with some of you and answering your questions. And if not, yeah, I wish you the best in your investing journey. And for all other things, make sure you have a plan and you stick to it, and remember that it's a marathon, not a sprint. And as long as you are in the right frame of mind, you'll be able to make a decent killing in the markets.
Thank you very much, Bharath. With that said, thank you so much for coming onto the podcast and really just parting out with the knowledge. Appreciate it. For those of you who are brand new to the podcast, make sure you subscribe. We get guests like Bharath, experts in different industries and different circles and different fields to come on and share, subscribe, and share the podcast with your friends. That's it. Thank you very much for listening. And thank you, Bharath, for showing and parting with the knowledge.